Hello everyone, welcome to Best of Us Investors. We as a tribe are gathering in the Discord server, where we share Carrie's portfolio, Carrie's buy and sells in real time, and we have live discussions every Mondays before the market opens and right after the market closes on Fridays in our voice channels in the Discord server. And of course, we share insights on stocks before the videos are released. The stock analysis team also analyzes stocks based on the votes from the tribe members. So hope to see you all in the Discord, where the link is listed in the description to join. We would also appreciate if you can subscribe and hit the like button, which will help our stock analysis videos. Now let's get started with our stock for this week. Today, we will be talking about Google, which I'm sure everyone has heard about. And as you know, Google has now become Alphabet, uniting the new segments additional to the Google's core search business, such as robotics, life science, autonomous vehicles, smart devices, and so on, becoming a tech giant with a stronger moat, in my opinion. So let's look at what Alphabet is actually working on. Now, to start with their core Google search business, they have, of course, the Google search engine, Android, Google Maps, Google Cloud, Google Ads, Google Play, and as we all know, Google has YouTube. The revenue primarily comes from advertisement or sales in apps, in-app purchases, fees from subscription services such as YouTube Premium and YouTube TV. Especially for YouTube, which is now one of their major platforms, 45% of the revenue from advertisement goes to Google, whereas the remaining 55% goes to the content creator. As the trend of influencers increase and with the rise of demand for content creating on YouTube, Google's revenue will keep increasing as well. Now, if you take a look at the branches of Alphabet, they have Calico, which stands for California Life Company, which is a department that is highly focusing on the extension of life and age-related diseases, working with big pharmaceutical companies such as AbbVie and C4 Therapeutics, and also is working with institutions such as the University of Pennsylvania. Google also has Google Venture and Google Capital for investments, and also Fiber for high-speed internet. Now, two very interesting projects, in my opinion, that's under Alphabet, and I think it has a huge potential in the upcoming future for Alphabet's growth, is Google Nest and Google X. As we all know, due to the fourth industrial revolution, connection of smart devices and smart home will become a norm in the future and has a huge growth potential. So when we say smart home, as it sounds, it means that everything will be automatically done by devices connected with each other. If you look at Google Nest, this is a line of smart home products, including smart speakers, smart displays, streaming devices, thermostats, smoke detectors, routers, and security systems, including smart doorbells, cameras, and smart locks. Now, this is an amazing moat for the company since data will be one of the major factors for the success of companies in the future to thrive. And Alphabet or Google has a ton of reach out into the daily activities of the users, meaning that they have a ton of data. And finally, they have Google X under Alphabet, where they focus on breakthrough technologies that have the potential to change the future. If you go to their Google X website, they have several projects in various sectors, such as Terra and Moon, where they are trying to give access of internet to as many people as possible on Earth. A project called Mineral, where they are combining artificial intelligence, sensors, and robotics to understand the plant world and trying to find ways to grow food in a way that is also good for the planet. They have Verily, again, trying to integrate artificial intelligence with minimized sensors in wearable devices to lead innovation to help healthcare professionals to be more proactive and accurate in their treatment for diseases. They are also involved in renewable energy and neural network, and of course in the autonomous vehicle sector with the well-known brand Waymo, and much more breakthrough technology-based projects, as you can check in their website. The company's passion based on the projects that they have is really working toward edge-cutting technologies to be a major player in changing the future of our lives. Now, the current market cap is around 2 trillion with 28 billion in debt, but over 135 billion in cash. If you also look into their ownership, around 70% is owned by institutions. So all in all, there's no doubt that Google is an amazing company with passionate vision in various sectors led by their founders, Larry Page and Sergey Brin. However, unfortunately, I do not own any stocks for Google at this point, but will definitely be one of the stocks I will be buying if there is a major correction or crash in the upcoming future.
So, well, as we all know, Google is infamous for having a giant monopoly. Finding real Google competitors is going to be hard since the top two search engines in the world are Google and YouTube, both owned by Google. So, it's going to be real difficult for another company to just step in there and overtake Google's search and video services. The first thing people usually do when they get a new computer is download Google Chrome. But even though possessing the world's top search engines is Google's gimmick, Google still has competition in other fields. For example, Samsung. Samsung is a competitor of Google in the smartphone, wearables, and the smart TV market, and probably some other markets too. Android OS is made by Google, and Samsung, being a fierce rival of Google, hates that they have to use it. Samsung has tried in the past to overthrow Google's Android OS, but with no luck, as every time they launched a new phone with original operating system, it flopped. But times have changed, and with companies like Samsung becoming so tech savvy nowadays, and that combined with Samsung selling the most phones in the world, making them Google's biggest customer for their OS, makes the possibility of Samsung finally coming up with a successful Android replacement a real threat to Google's market share in that sector. However, this is far more easily said than done, as Google has a huge advantage in this field, coming up with a new OS that comes even remotely close to being as good as Google's Android OS is going to be pretty difficult. Google is a pretty neat company. Revenue growth over the last 5 years has been very nice and very consistent. Profit growth too. They have so very little debt and so much cash. They can pay off all their debt and it wouldn't put a dent in their cash position. They still have about $123 billion in cash and cash equivalents. Microsoft and Facebook, the stocks I'm going to further compare Google to, all have a market cap from around 1 to 2 trillion. Google being in the middle but making the most money in sales. However, Microsoft catches up to them in earnings, as Google has a much lower profit margin than Microsoft. Google has the lowest price to sales ratio and the second lowest price to earnings ratio, second to Facebook. Furthermore, Google has a nice 320 billion in assets and 97 billion in liabilities, giving them a price to book ratio of about 8, almost identical to that of Facebook. Microsoft, on the other hand, has a price to book ratio of around 15.5. Google spends the most on their R&D, which I like to see. Regarding their operating ratio, they are a bit higher. Facebook and Microsoft have almost identical operating ratios here of just under 0.6, but Google is placed at just above 0.7. Furthermore, as I said, they all have nice cash positions, and Facebook has about half that of Microsoft and Google. And finally, regarding profit margins, Google has a profit margin of 29%, and Microsoft has one of 38%, and Facebook one of 37%.
So regarding the partnerships that Google has, of course, Google partners with over 2 million non-Google websites to show ads. Millions of developers partner with Google on their Play Store to introduce apps, and many influencers partner with Google alongside with YouTube to show ads on their videos, and they're all part of the YouTube partner program. So overall, there's just many websites, developers, people, they all partner with Google. Google partnered with Coursera, which is a learning platform where you can basically search up anything you want to learn, and there's going to be tons of courses on it. And Google is going to train IT professionals and grant over 10,000 scholarships to Coursera's learning platform through this partnership with Coursera. They also partner with many organizations and companies that offer courses on Google Digital Garage. Google Digital Garage is basically Google's own learning platform. They introduce many courses on Google Digital Garage, and it has many organizations and companies that have partnered with Google that display their courses and learning web pages on Google Digital Garage. Another one of Google's plans is that they go ahead and just buy many small innovative companies before they get too big, like they did with YouTube. Like this in 2005, they purchased around 15 companies like SketchUp, which is a 3D drawing application, and DoubleClick, which is an advertising company. Moving on to the cons and risks of Google. On the technical side, the RSI is overbought on the weekly and monthly charts. And for many stocks, it can just stay overbought or it can take a downturn. So it is an overall risk to consider, as on the monthly chart, Google has been followed by a downtrend once it does go overbought. And it is overbought on both the weekly and monthly charts, with that being above the 70 RSI. And taking a look at the 20 moving average, Google recently just had a sharp drop and it did go below the 20 moving average. It's not too significant, but it is something to consider, as investors don't really like stocks going below the 20 moving average or any of the other moving averages, and it could be followed by a period to sell, but it's only down like 0.10%, so it's not too significant, and I think it will reclaim the 20 MA, but it is something to consider. The MACD on Google looks like it's curling down on the daily chart and along with the 4-hour chart. On most of the charts, the MACD histogram has turned red and it is curling back towards the bottom level. On the monthly chart, the MACD seems to be at all-time highs, and then it could take a downturn from there. And with the MACD showing price strength and it going red and curling down is not a good sign and a risk to consider. Google does have a monopoly, but all big companies from the past have eventually taken a blow. The case for big companies now might be different, as many companies realize that if they don't innovate, they're going to come to an end. So some examples like Hewlett-Packard, Sears, and many of these big older companies, they stopped innovating and they all met their end. And if Google does not innovate, it could be forced to an end regardless of their current monopolies and whatever they're having right now. And Google does constantly innovate, like they do have plans to come into the healthcare field. But if they just stop innovating, that is a big risk to consider with the tech giant. The other thing is that Google's revenue has been steadily increasing every time, but if it does fail to beat the revenue even one time, I think that could provide a negative reactions from a lot of investors, seeing that Google's revenue didn't grow. If you see Google's, it's been just going up and up and up, and eventually it will not grow like one period. And after this long streak just gone, I think that could provide a pretty big negative reaction from investors. And another thing is that advertising problems. Google's main revenue does come from advertisement, and problems with other companies such as Apple, which introduced a personalized ads canceling feature to provide safety and privacy for Apple users, which Facebook and Google were not very happy about. Things like that could directly impact Google. We're also heading into like a future where AI would control majority of the buying and selling and all these jobs of advertisement for us. Advertising may as well become dead or disrupted. That could directly impact Google, as like 80% of their revenue does come from advertising. And if Google does fail to innovate in the artificial intelligence area, their monopoly may not last for too long.
Okay, today we're going to look under the hood of Google, or otherwise known as Alphabet. Normally I go in depth on the financials through the 10Ks or the 10Qs, but this weekend I'm in the Black Hills of South Dakota doing a little side-by-side, and we just got off the trails. So I'm going to do a little bit of an abbreviated financial overview. I mean, it's a good company that you guys have all known about. So let's just take a look under the hood. We'll start with the second quarter 2021 results on the consolidated statement of income. You can see that they had a strong second quarter revenue, 61.9 billion as opposed to 38.2 billion from the quarter before. So they ended up to 117 billion of revenue year to date ending June 30th compared to the year before of 79 billion. So revenues are increasing, which is awesome. You look at the operating margin. The operating margin is 19.36 billion, which is 31% operating margin, which is awesome also for what Alphabet does. Looking down a little further, the net income, you can see the net income is increasing from 6.9 billion to 18 billion. And for the 6 months ending, we went basically 36 billion from 13.7 billion. So revenue is strong, the operating income is strong, margins are increasing. So from the consolidated statement of income, it looks like we're hitting on all cylinders. Basic earnings per share, $53.54 per share compared to 20 before. That's something I like to see also. Numbers of shares that they have are actually decreasing. You can see 680,000 million shares and now 689 from the time before, year to date, June 30th, 2020. If we take a look at the balance sheet, you can see current assets basic are in excess of 175 billion, and the total current liabilities are basically 55 billion. So assets over current liabilities means they can pay their short-term bills. They have no problem. They have plenty of cash on hand. So the balance sheet looks strong. Just to make this short, I mean, everybody knows what Alphabet is and what Google is and how strong a company they are. So I'm just going to go through the 8 things that I look at in a financial summary and kind of grade them. So if I go to revenues are increasing, so that's a plus for me. The operating income has been increasing. increasing. That's a plus for me. The net income is increasing year over year, quarter over quarter. That's a plus for me. Per share earnings totally increasing again, another plus. Number of shares are decreasing. So that means that shareholders have more value when they decrease the shares by buying back shares. So that's a plus. The balance sheet shows current assets greater than current liabilities, which means they can pay their short-term debts. That's a plus. Stock-based compensation is steady when you look at stock-based compensation. Plus, they can afford stock-based compensation. They're making money, so they can afford to pay their employees, executives into stock-based. Unlike a lot of growth companies that don't have the revenue, but they still do it. So that I do like. And then when you look at the liquidity and capital resources, most cash is provided by their operations, and they don't have to go out and sell shares like growth companies do or get notes and borrow money. So all in all, Alphabet, Google is a solid company. And it would be something if you wanted to get into, I'd do a little more due diligence, get the 10K, get the 10Q, get into the weeds, figure it out, then find yourself an entry point on the price. You can buy on certain brokerages like I have Fidelity. You can buy fractional shares, dollar cost average in if that's what you'd like to do. But I believe that it would be a good company to have in anyone's portfolio.